Now we will understand the meaning of joint stock company. A joint stock company is a business entity which is owned collectively by its shareholders. The shareholders are the owners of the company. The company is managed on behalf of the shareholders and it is managed by board of directors who are elected by the shareholders in the annual general meeting. The shares of joint stock company can be transferred freely from one shareholder to another person except in a private company. That is, in the case of private company, the shares cannot be easily transferred. A joint stock company is an artificial person. It has legal existence separate from persons composing it. It can sue and be sued in its own name. Sue means someone can file the case against joint stock company and the joint stock company can also file the case against other company or persons. A joint stock company is created by law. It is established for commercial purposes. It has perpetual succession. Perpetual means continuous succession. And it has a common seal. Now we will understand the features of joint stock company. The features of joint stock company are artificial person, perpetual succession, legal formation, common seal, limited liability, separate legal entity, and the number of shareholders. We will understand each of these features one by one in detail. First is artificial person. A joint stock company is an artificial person. Joint stock company is created by law. It does not have the shape or physical form of a human being. It has its own existence in the eyes of law. And joint stock company is independent of its investor. Like natural persons, a company can own property, incur debts, borrow money, enter into contracts in its own name. It can sue and be sued in the court of law. But joint stock company cannot breathe, eat, run, talk, and so on. So, joint stock company is called an artificial person. Next is perpetual succession. A joint stock company is the creation of law. It can be brought to an end only by law. It will only cease to exist when a specific procedure for its closure called winding up is completed. Members may come and members may go, but the company continues to exist. Joint stock company remains unaffected by the death, lunacy, or insolvency of any of its investors. Lunacy means foolish acts or mental ill health of the investor. In case of death of the investor, the shares of the company will be transferred to the legal heirs of the investor. Number 3, legal formation. The formation of joint stock company is time consuming, expensive and complicated process. In the case of a sole proprietorship, you can simply set up a board on the shop and you can start the business. But if you want to set up a company, you have to comply with the provisions of the Companies Act 2013 to set up or wind up the company. This is the provision which is applicable in India. Common seal. What is the meaning of common seal? Here, these are the common seals. That is, whenever a company has to sign a document, it cannot sign in itself. So every company has a common seal. Any document which carries the common seal of the company, common seal means stamp of the company, and the paper is duly signed by a designated official of the company, the said document becomes legally binding on the company. Here you can understand from the picture what is the meaning of common seal. Here mostly the name of the company is given in circle, and in between there is a logo of the company. Next feature of joint stock company is limited liability. The liability of the members is limited. The creditors can use only the assets of the company to settle their claims. Suppose a person is a shareholder in a company and he is having 200 shares, and the shares are of the face value of rupees 10 each. That is, he has invested rupees 2000 in the company on its face value. Now, in the case of default of the company to pay the debts, the creditors can only use this amount of 2000. Further, if we take the same example and the shareholder is having 200 shares, but so far he has paid only rupees 6, and the balance of rupees 4 per share is to be paid by the shareholder, then in that case, and the company is in default to pay the debts, the shareholders may be asked to the balance amount of rupees 800 rupees, being the amount which is payable by him towards the shares which are being held by him. Beyond this amount, he is not liable to pay anything towards the debts or losses of the company. Separate legal entity. A joint stock company is a separate legal entity. A company can possess properties, it can open its own bank account, it can sue and be sued. Its assets and liabilities are separate from those of its members. Number of shareholders. There must be a minimum of 2 shareholders and a maximum of 200 shareholders in a private limited company. In case of public limited company, minimum number of shareholders is 7, and there is no limit on the maximum number of shareholders. For example, there are more than 33 lakh shareholders in Reliance Industries Limited. We may add that we have already uploaded various courses such as email writing, future tense, past tense, present tense, cybersecurity, most common mistakes in English grammar, letter writing, DBMS, information technology, and much more. You can look out for the same on Google, YouTube, our own website, Udemy, Tutorials Point, etc. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.